So just to kick things off for tonight, I am very excited to introduce tonight's presentation. The Grand Royale is actually a very special project for Aang and Tozy Capital, so we're super excited to be sharing it with you guys tonight. So here's a little sneak peek into tonight's presentation. So if we go over to the table of contents here, we're first going to cover the best highlights of senior living as an asset class, and you'll understand why we're so particularly excited about this asset. And then we'll go into the details of the investment offering itself. And we'll also close by sharing some details on the location and facility itself so you can get a better feel for what this place looks like in real life. And before we jump into all the goodies, we kind of have to go over some of the necessities. As you know, this is a confidential private offering, and we kindly ask you not to share this information with anybody else without Tozy permission. Okay, so I won't keep you guys waiting any longer. Introducing the man of the hour, Aang, please take it away.
Thanks, Alex. I'm very excited to introduce this asset and this asset class. As many of you guys know, there's a graying of America, and oftentimes it's called the silver tsunami. There's a lot of facts I can shout out about why this is the case. You guys know it's probably the case, and this is creating an unprecedented demand for senior living facilities. Seniors currently pay $3,000 to $10,000 a month for housing and care, and there's a huge supply-demand curve that there's going to be created in the next 5 years. Not only at a macro level, but at a micro level. Where we're investing, there is an 8x demand in senior living and memory care facilities compared to available beds. Why I love senior living? It combines two of my favorite things: real estate and high cash flow. And cash flow operating businesses like senior living typically generate 80% more NOI than multifamily. And not only that, but their rents are typically 4 times higher than multifamily rents, with only 3 times the expense. So it's a really great investment for high cash flow businesses. And this is why Tozy Capital is investing heavily in senior living and in Kansas City as well. So just in the overview, the Grand Royale is a 105-unit, newly converted senior living facility in Gladstone, Missouri, just north of Kansas City. Acquired well below replacement costs. In fact, we're acquiring it with the developer, Chuck Coda, who lives 2 blocks from this facility. It enters the market with strong local fundamentals and limited competition. And for the foreseeable future, we are going to be offering a lot of similar type investments with preferred equity positions with fixed monthly returns that also yield significant tax benefits. And we're very excited to offer our first 3-year hold investment as well, something that a lot of investors have been asking for. So I want to highlight why I love this place. It's newly developed Class A asset, and that's going to be very good for predictability and future cash flow. That means we're going to have very limited capital expenditures. Everything has been put into this. Around $14.5 million of development have gone into this. We're acquiring it for just over 16. It's also in Gladstone, Missouri, which is a very well-to-do suburb with an aging population, just like most of America, but more so in these well-to-do neighborhoods like Gladstone, Missouri. For those who aren't familiar with preferred equity, it has a similar risk profile to debt, but still provides the returns like equity. And for this one, we're providing 6, 12, and 18% returns in a year. And this would be a 3-year hold, and at which point investors can exit. However, they can also exit with us into a tender exchange and keep deferring those excellent depreciation benefits. The facility itself is a mix of independent living, assisted living, and skilled nursing. We call this a continuum of care and allows our seniors to graduate into the next phase of their care, long-term care solutions. We're also very excited to partner with Epic Healthcare Solutions, which have over 100 years of extensive operational, clinical, and regulatory experience in the senior living facilities, and and the management team has owned and operated over 36 themselves. The investment terms is very simple, and I love providing our investors simple, high yield, tax favorable investments. And one of the things that makes tax favorable investments is depreciation. We will be closing in December 2020 and providing K1 in March. And that K1 will provide you guys a huge paper loss. And we estimate 50 to 60% of your cost basis of investment will be in the form of bonus depreciation. And this is typically done because we have low land value, which isn't depreciable in Kansas City. Oftentimes we can claim less than 5% land value, and we're taking relatively high leverage, in this case, 68%. So a very simple monthly dividend starting in month one, and actually in this case, a little bit above month one, providing 6% returns in the first year, 12% the second, 18% the third. And then at the end of 3 years, you receive your capital back for a really quick turnaround. And of course, there's an optional extension, and I'll highlight that in a few slides. So I just want to, this slide might be a little bit redundant, but I just want to highlight how simple cash flow feels. And for a lot of you guys who have invested in real estate and don't really see cash flow, you have rents coming in, but you have mortgages coming out, you have expenses, you have toilet issues. Real estate should feel like a cash flow investment. You should be collecting rent every month. And in this case, we were providing a monthly preferred equity payout. And for $100,000 investment, for example, in the first month, you get $500 for 12 months, for 12 full months. Then you collect $1,000 a month. And then you collect $1,500 a month, and starting in year 3. It's very excellent, predictable returns for an investment of short-term hold. To highlight the investment timeline, we're in the middle of Thanksgiving, but our team is working very hard to get the subscription docs ready, the legal documents that for those who are interested in investing, we will be sending those relatively soon, likely next week. And then we have a funding deadline of mid-December. We'll close the asset before the end of the year. We'll do the cost segregation in January likely, but we'll backdate it into December because that's when we close. The first monthly payment will be in March. Typically, we'll then catch up that 1 month that we miss in a few months, usually before the end of the year. The occupancy, we will reach stabilization at 80% in year 2. And once it's stabilized for a year or so, we will then do a refinance. The operators will do a refinance, and the capital will be returned at the end of year 3. So a lot of people who invest in syndications or these type of investments often wonder what happens when they exit. Do they have to pay the taxes? For this type of investment, because there's no capital appreciation, there's actually no capital gains that you have to pay. You've been receiving cash flow, and your depreciation benefit has been washing that out and making it basically you're not paying any taxes on your 6, 12, and 18% returns. But for those who want to continue this gravy train, you can, and we'll basically do a tender exchange of this investment entity into a similar new senior living facility, new senior living fund that provide excellent monthly and annual returns. And of course, this is optional, so you can either exit or you can stay, and you'll know what you're exiting into. And for those who don't know, when you exit anything, there's such a thing called depreciation recapture. Remember, depreciation is just a deferral of taxes that you have to pay potentially. When you recapture it, you convert it from passive income, which could be taxed at a higher rate, to long-term capital gains rate. So a conversion of tax types that's already beneficial. Of course, the deferral is not a huge benefit. When you exit, you have a depreciation recapture and you have to pay those taxes. But when you tender on exchange, you keep deferring that and keep collecting a higher cost basis or collecting a lower cost basis due to these depreciation benefits. So with the purchase of a new acquisition, you can also obtain additional potential benefit of depreciation. Of course, this is all optional for you guys. So I want to highlight Gladstone, Missouri. It's north of Kansas City in a very well-to-do suburb. And I want to also highlight the fact that there are many hospitals nearby. And this is a very important point. You want to be near a hospital. That's not only a great marketing tool because it gives assurances to the family, but it's also a great feeder system. That feeder system allows us to collect discharges that need a senior living facility like ours and to accommodate their long-term care. They have the short-term care in the hospital. They continue on with us for long-term care. So the demographics of Gladstone is very favorable. There's a fairly high median net worth and a very high average net worth. And the population is growing year by year in terms of the targeted population of 75 plus. In senior living, there are typically 4 types of care. And we have what we know typically as a continuum of care. You start with independent living, which is designed for the seniors to enjoy their lives in a community, like an all-inclusive resort. They graduate to assisted living for those who can't live and by themselves or is ill-advised to do so. They still have the friends, they still have the facility that they come to love, or if for those new to it, they are finding amazing perks and benefits like a home movie theater. I mean, like a theater and a bar and a speakeasy and restaurants and 3 meals a day, all served right on your doorsteps. And of course, we have skilled nursing, which is for those who need 24-hour registered nursing care. This isn't typically a long-term solution. People don't need this for too long. This is typically a 2 to 3 week stay. But this is also the first thing that fills up in any senior living facility. When the doctors discharge a patient, they continue to need care and they discharge them to skilled nursing facilities like ours. That allows us to house them, provide them the great quality care. And for those who see this as a potential place to continue their long-term care, they can then graduate or be a feeder system from skilled nursing into independent living if they can, or assisted living if they wish. The residential rental plans, we have different levels of sizes and price points. We have 2 price points really. It's for the size of your apartment buildings and the location, and then for the level of care. So you have studio, 1 bedroom, and 2 bedroom. And 2 bedroom is really nice for couples or lifelong friends to enjoy themselves. And one thing I want to highlight is these are artist renderings, but they highlight the space very well and how they'll be used and decorated. It's really like an all-inclusive resort for seniors, typically 85 and above, and still have a really robust social life. They are able to move into these nice living accommodations in a community where they can make friends, continue friendships, as well as they can bring their own furniture and their own knickknacks and artifacts from their past and the present. This really allows them to make it feel like home. And that's what we're trying to do for our seniors. Create a home that allows them to age gracefully in peace in a community where they will have loved ones and peers to hang out with, to play bingo, to drink at the bar, to reminisce, to play poker. And of course, with COVID, we're all very concerned, and the big facilities like ours operate with strict lockdown measures. All guests and staff are checked regularly on temperature checks, as well as they have weekly antibody checks. Any new visitors are screened and are restricted to a COVID measured room where there's glass barriers. So family members can still visit each other, but direct contact doesn't allow for contagion to be exposed to the greater community. The investment team is me, Tozy Capital, and else at Tozy Capital, and Chuck. And Chuck's a really good friend of ours, and we've done a few other deals with him. He's the principal developer of the Grand Royale, lives 2 blocks away, and his grandfather used to live in the senior living facility that was this facility before that went to that changed hands and then went for disrepair. And I also want to highlight our amazing management team with a wealth of experience. Epic Healthcare Solutions, led by Brian and Brian, have years of experience and operate many other continuum of care facilities. We also have Sandy Reed, who is a registered nurse and will be managing the the nurses, but also has a really great relationship with Liberty Hospital and another fetus hospital in North Kansas City. She can already provide us a great referral network to gain a lot of quick skilled nursing seniors and residents that could be potential lifelong residents for us. So a very quick presentation, but I want to make a lot of time for Q&A. And thanks for your time.
Okay, great. I hope everyone enjoyed that presentation. We've got some really great questions coming in throughout the presentation. And it looks like we have some questions specifically about the facility itself. And you kind of talked a little bit about there being a really good supply and demand dynamic in Gladstone. Do we know why the seller is selling the place?
The seller isn't actually selling the place. This isn't actually a purchase. We are actually recapitalizing out his preferred equity partners that helped develop it. It's a very similar model of what we're doing now. The investment would be recapitalized out in 3 years. He will continue to hold it. He is the one who developed it. He's the one who's going to run it and have a major stake in making it run really well.
Yeah, great. And it looks like we also have nicely tied into depreciation here and on the asset itself. Could you explain in more detail just about how that depreciation recapture and the 1031 exchange works for this particular offering?
Yes. So when you typically exit a syndication, let's use the example of a 5-year hold. You invest $100,000. You collect in the first year a $60,000 bonus depreciation loss because you're able to accelerate depreciation that's scheduled at 5, 7, and 10 and 15 years into the first year. This was a new law that passed in the 2017 Jobs Act. It was very favorable for real estate investors. So that 60% or that $60,000 of losses washes out meaning it neutralizes the $12,000 that you have gotten. For example, for the other funds that potentially we will be offering soon that have 1% a month, that allows you to then pay nothing on your $12,000 dividends. The next year, you carry forward the remainder of that 60 minus 12, 48. You collect a little bit more, around 4, to help, because you have also the straight line depreciation. So you have 48 plus 4. Now you have 52 losses. You collect another 12 of net positive gains. As you can see, the math is favorable to allow you to pay no taxes for the entire 5-year hold period. In my life of 12 years real estate investing, I probably have paid 4% total on my real estate profits, and made a lot of profits. So with a depreciation recapture, what happens is that $60,000 and all the depreciation that you've collected along the way, it becomes taxable. The bill is come due. Now, for most real estate investors, what we do is 1031 exchange to the next one. By 1031 exchange to the next one, you're able to defer the taxation of the capital gains. Now, there's no capital gains here because it's a preferred equity position. But as I mentioned, the depreciation recapture is a capital gain. That capital gain would be taxed at long-term capital gains tax, but now that gets deferred into the next investment, where potentially we'll do the same thing, and you'll get another $60,000 of depreciation benefit, all from the same initial $100,000 investment with no additional investment needed or any initial additional work needed by you guys. You guys let us know if you guys want to continue with us on that option. We've identified another asset. Potentially might be something we have already in the pipeline. We're going really big into senior living, and I see this as a very strong trend for the next 15 years. And so for those who then continue on with us, that's depreciation recapture gets wiped out. So you get a really nice double tax benefit within a short 3-year time span. Sorry, it's a long answer.
And that actually leads really beautifully into another popular question we have here. For the 1031 exchange investment, do we have a timeline on when that needs to be decided by, whether that's the end of year 1, year 2, year 3, just so investors have time to plan ahead for that?
Yes. So tell us when we capitalize out. The day you get your $100,000 back, and you will get that $100,000 back at the end of 36 months, you have to let us know, are you in or are you out? Because then if you're in with us, we don't provide you the $100,000. We take that money and invest it in something very similar, likely another senior living facility that has high cash flow in a preferred equity position. We then do another cost segregation study for you, provide that, and you get all those benefits. So you don't have to tell us way in advance. You can tell us right at the end.
Great. And it looks like we have some questions too, also just about the facility itself. So this is a newly converted facility. Is it already up and running as a senior housing and it's ready to go? And how new is it compared to other facilities in the area?
It is brand new. It hasn't been opened yet. It's going to open in January. And in December, we're doing the finishing touches. So this is a Class A brand new facility. It's taken 22 months to redevelop. And to be honest, if I was developing it, I'll probably have spent 75% the cost. But we're not coming in at that stage. We're coming in after they spent a lot of money developing it very nicely. So we're taking advantage of that timeline. And compared to the other senior living facilities in the 5-mile radius, which is limited to 3, 2 of them are built in the 80s, and 1 of them is only assisted living. So we do provide that continuum care and that robust mix for greater a chance to acquire a lease of new tenants.
Yeah, and this is almost a unique asset because it's located in Gladstone. And so I really love this next question here. I think old people usually go to Florida when they retire, right? So why would they want to be here in Gladstone instead of Florida or Arizona?
That's a great question. I would love to be in Florida myself. But if I lived and grew up in Gladstone, Missouri, all my family is still probably there. And all my friends are there. And all my memories are there. And this is really the end of life for me. You go to Florida for 55 plus senior facility communities. You go back home to be back home. And a lot of people call Gladstone home. So what we found out is people do really enjoy senior living facilities. They're typically built in Florida, and that's why people go to Florida. But once you build them in their backyards at home, then they can prefer to choose that option.
Yeah, and just on that note, just with the COVID pandemic and the nature of the economy right now, have there been any specific regulations or COVID precautions that have been put into place specifically for senior housing assets that we're investing in?
So, as some of you guys have been aware or heard, the first outbreaks in America were in senior living facilities. But really, there were nursing homes that were small residential homes converted into senior living facilities. They're really mom and pop operators, and those were the facilities that got struck first. Now, with larger facilities, that's mostly hasn't happened, and the additional regulations has mostly been around the fact that we can't have too many visitors. You have to be only within a check parameter. But we even go further than that, and we limit the visitation to these COVID prevention areas.
Yeah, and just on that note, are you particularly aware of any permits that might be applied for nearby senior living facilities?
Yeah, there are no new permits being applied in the nearby area. And one thing that I want to highlight also is for assisted living and skilled nursing, you need a certificate of needs. That's a license that's issued by the local municipality and takes quite a while to obtain. So once we were able to acquire as many licenses as possible, we are now an official feeder system for these hospitals. We're part of the community now, and it would be harder for new entrants to gain the same licenses.
Okay, great. And just being mindful of time here, we have time for just a few questions. I know we got a lot of questions here, and we are taking note of every single question, and we will get back to you individually in case we can't get to it here. But could you talk a little bit about what the requirements are to participate in this offering, and if there's a minimum allowed per investor?
Yeah, so this is an open for 506B offering. So we will be able to accept a few sophisticated investors. We do want to make our investments as accessible as possible. We truly and fundamentally believe that cash flow investments like this, predictable fixed monthly cash flow of 6, 12, and 18% is a really great way to invest in real estate. So with that, we want to make sure that for those who have invested with us can invest at a level they comfortable with. But our typical expectation for most investors is around 200,000, and our minimum is 100,000.
Okay, great. And just squeezing in one last one because this one came in a couple of times. 6, 12, 18, that sounds pretty high. How are you comfortable delivering returns that high? Because that honestly sounds a little too good to be true.
So if you have seen any other syndications, sometimes they have preferred equity. And the preferred equity is 10%, which is pretty low compared to average of 12. So how did it get to such a high average? The first is senior living. It's a high cash flowing business. It's one of the assets that can provide for this type of really great high double digit 12% cash flow. 12 is way better than 10. Another thing that you see in those other investments is a magnitude of shares like A class preferred equity, B class common equity, with the B class highlighting a lower cash and cash, but potentially upside. And the way that works is they only need to have a certain amount of cash flow to pay the preferred equity. Preferred equity in the capital stack looks like this. You have debt, you have preferred equity, then you have all the other equity. So preferred equity gets paid first. So in order to get 12%, if the preferred equity position occupies only half the equity, then you only have to get 6% cash flow for that preferred equity position to pay 12%. So it's a really safe asset to hold and still has all the benefits, the great tax benefits of owning equity in real estate.
Okay, thank you, Eng, for that. And just being mindful of time here, we're going to start wrapping things up, everyone. In case we did not get to your question in this presentation, we have taken note of it. And we also encourage you to set up a time with us to get your questions answered in some more detail, because a lot of the questions that came in, they are a little bit more specific and personalized. But I do just want to end things by saying thank you so much for being here again. We will be sending out invitations later tonight, so please keep an eye on your inbox for details shortly. And as always, if you have any more questions specific to the asset or our investment thesis in general, please feel free to contact us, and we will follow up with you as fast as possible.
Actually, Alex, can I show a video?
Oh, that's right. Yeah. We have a little sneak peek for you guys as well.
Hopefully you guys enjoy and can hear it. Hi, I'm Eng with Tozy Capital, and welcome to the Grand Royale. One of the great things about Grand Royale is that it has a continuum of care. Independent living is the start of that continuum. Independent living allows seniors to receive a full range of services, including meals prep, laundry done for them, entertainment services, as well as having their peers around to socialize on a daily basis. Assisted living allows our residents to receive a greater quality of care, a greater assistance when they can no longer safely live by themselves. Assisted living graduates to skilled nursing. For those who need 24-hour registered nursing assistance, Grand Royale provides that. Liberty Hospital, North Kansas City, and St. Luke's North Hospital are all feeder systems conveniently located within a very short distance of the Grand Royale. They have over 20,000 discharges every year for seniors of this population, and around 1,500 of them are discharged straight to senior living facilities. This allows us to capture a lot of pent-up demand, because right now a lot of the competition does not offer a continuum of care. Grand Royale is already licensed for 43 assisted living and 28 skilled nursing beds. I love buying facilities that are already pre-licensed. Otherwise, you can introduce uncertainty that could impact the investment. We love to provide our investors a predictable, certain return. This specific submarket of Kansas City, Glaston, Missouri, has an average net worth for seniors of $840,000. Within the next 15 years, you'll see a 16% increase in the population of 75 and above. Here at Tozy Capital, we love high cash flowing assets. When you combine strong operational expertise with Grand Royale and a high income asset like Grand Royale, we can provide our investors predictable, fixed cash flow.
With and receiving facilities compared to other type of assets like multifamily, the spreads and the yields on it are much higher. So they're oftentimes 80% higher return on value as well as return on cash flow compared to other type of asset classes. We want to make sure our investors get paid first and their returns first. When we refinance year 3, this will allow us to recapitalize the investors, providing them the full return on capital back. Here at Tozy Capital, we invest in big.
Okay, and that is a great way to close out tonight's presentation. As a reminder, we encourage you to reach out to us to get all your questions that we couldn't get to in the presentation today. But I just want to say again, thank you so much for being here. We will be sending out invitations to your inbox shortly, so please keep an eye out on your inbox tonight. But other than that, do we have any other closing words, Eng?
Happy Thanksgiving, guys.
That's right. Happy Thanksgiving, guys. Thank you so much for being here again.
Have a good night.
Bye now.